Welcome back. There was a recovery about 1 hour back in the markets, but now we're stalling around the 25,600 mark on the way up, facing a bit of resistance, and markets have gone sideways, holding up in the green with a gain of about 0.4%. But you can see in the last half an hour or so, we've not managed to accrue any gains. Defense is a pack which is doing pretty well. The Nifty Defense Index is the top sectoral gainer, and in that, data patterns leading right from the front, 6.5%. You've got Aparis Defense, Hindustan Aeronautics, BEL, BEML. That screen is buzzing and alive. But let's invite Ajit Mishra on the show now from Religare Broking. Ajit, thank you very much for joining in. Good rebound after yesterday's sharp sell-off. Do you see upward momentum? What's the trade?
Yeah, hi, good morning. So yes, it's been almost like 2 weeks that we are seeing this roller coaster ride continuing in the index. Means 25,400 on the downside and 26,000 on the higher side. So that's the range basically broadly that we are trading in. Yesterday we have seen after almost 3 days of advance, market retraced all the gains and we have retested the lower band, and again we are seeing a rebound attempt. So are we going to sustain those gains? It seems difficult considering that only banking is holding strong while the other sectors are not moving in tandem. So it's going to be more of a consolidation trend continuing in the index. So rather focusing on the index, the prudent approach is to focus more on banking index when it comes to the positioning on the index side, or stock specific approach. So basis that, the PSU banks looks comparatively stronger, and Canara Bank after this marginal consolidation is offering a fresh buying opportunity. So here you can go for long positions with 148 as a stop loss and 160 as a target. At the same time, since the tone is still consolidation, we are still getting opportunities on the short side also. So Dixon, after this recent consolidation or marginal uptick, we are again seeing the selling pressure emerging at the higher end, and in fact it's a fresh breakdown from the consolidation range as well. So this may result in a gap that we have on the daily chart around 10,500 to be filled. So with that as a target, one can go short in Dixon even at current levels with 11,350 as a stop loss.
Okay, Ajit, so Dixon and Canara are the two names you gave us. Any play on, the AI trade, some of the names that have been gaining, and also this Pax Silica alliance that has been signed, GMDC, NALCO, NLC, any opportunities there? Anything on your radar?
The GMDC definitely looks promising. Means it's been almost 2-3 months that the stock has been consolidating around its record highs, but every time we see that dip, it's largely maintaining its lower high, lower low structure. So this gives us confidence that eventually we might see a breakout above 620, 640 mark. So here, in fact, at current levels also, one can look for accumulation, considering that we have multiple supports around 540 levels. So here, definitely, you can go long with 640, 660 as a position target. At the same time, IT stocks, I still feel they are vulnerable for short-term volatility, and for a time being now, if the view is short-term, one should refrain from any aggressive bets.
Thank you very much for joining in, Ajit. Get into a break. On the other side, we'll discuss market fundamentals. Nikunj Doshi, Managing Partner, CIO PMS from Bay Capital Investment Advisors, joins in next.